Hello traders, Corey Mitchell here at TradeThatSwing.com. In this play-by-play video, I'm going to look a little bit more at when not to trade and mind frame. So I want to discuss two things. Mind frame coming in, like what's the mentality coming in? Are we looking to make money? Are we looking to follow a process? And then that's going to tie into what conditions we trade in. So last few videos have been more about like trades we definitely want to be in. This is more about trades we don't want to be in because of certain conditions. So let's go through the first thing. I'm going to use the European session because I said I'd try to do a few videos on the European session because it is a little bit different than the US session, where you have a big London market coming in to the US session. So over here the US session starts. We have a lot of price action to base it off of. Europe's a big market. Whereas when London open, it tends to be coming out of a quieter time of day. The EURUSD not as actively traded. It's very quiet during the Asian session over here. Generally, not always, but usually. And it tends to be a little bit quieter coming into the market. Whereas the US session, these are the most volatile hours of the day when both US and London are open. Here, a little bit quieter. So this is why I want to focus on this for this session. So let's start with mind frame coming in. Pre-trade routine is so important to establish that once trading begins, our sole purpose is to follow our strategy, which should include rules for when not to trade. And that sounds simple. Everyone says, yeah, okay, of course, I know that. But for myself and every trader I've pretty much ever met, we're trading to make money, but that switch doesn't get turned off, and it should, once we start trading. What I mean by that is if you come into this day really wanting to make some money, then even when conditions are not good, you start to fall into traps of, well, yeah, there's not a lot of movement here. We'll get to that in a second. But maybe I'll just hop in and, try to make a bit. There is a little rounded bottom there. I'm going to hop in. And a few of those trades are probably going to work out. But over many trades, they're going to slowly sap your capital because you're just trading in conditions that are not good. And the mind frame isn't in a place where it's looking for only the highest quality setup. So before each trading session begins, I have to really enforce that I am not here to make money. I am looking for really exceptional patterns where things line up, where there's room for the price to move, where it's basically kind of easy, really easy money. That's really what I want to be trading. And if I'm just trying to squeeze out a tiny bit here and a tiny bit there, that's not really great conditions. And we trade good in different environments. So an easy environment for you might be a not easy environment for someone else. We're going to go over a few things that I look for. But that mentality coming in, and it's kind of weird because, of course, we are trading to make money. So once we start trading, it's not that we're just saying like, yeah, I don't care about the money anymore. Of course we do. But the way to make the money, and this is what we need to convince ourselves of pretty much every day, is that in order to make the money, we need to be in a calm mind frame that allows us to wait for those ideal setups and not get lured in when there's little moves or trying to capture everything. It's basically it's like creating boundaries and saying, I expect this from the market and I will not trade until I see that. And it's you're asking the market to do what you want to do, as opposed to you getting lured in, the market doing its random things, and you getting caught up in your own head and saying, okay, maybe I should trade this. No, you've now switched into the game they want you to play to take your money. Other traders, you have to have your clear boundaries set on, this is what I look for, this is what I'm going to wait for, and I'm only going to trade that. And that's the focus, as opposed to, if you're looking for money, you're going to get lured into the markets game. So that's number one, which then allows us to better use context and understand the conditions. So coming in here, each one of these lines or kind of squares is 5 pips. Now for myself, I generally have a rule: if we're moving under 10 pips in the last hour, I'm not interested at all. And ideally I like over 15 pips. And here we can see, like, the market opens, we move up a few pips, move down a few pips. For reference, this is scaled to about the daily average range. I do that every morning. I just show right now it's about 65 pips or so. So I'll show on my screen just about 65 pips from top to bottom, and I'll kind of center where we are in the middle of the chart. And that instantly just gives you an idea of how much the price is moving. Right, so we can see pretty quiet. It's not taking up much of my screen, the whole price action. And we come in and it's pretty rangy off the bat. So this is what we look for. London, this is what I'll look for. You either start out kind of choppy. I'll usually wait for it to move at least 10 pips. And here we only move up about 7 pips. Even if we look at the last hour or so, we had a little bit of news right at 3 o'clock, so you probably wouldn't even be trading till a little after that. Over the last hour, 3 going back to like 2 o'clock, that's the high point. We're under 15 pips, so this is definitely puts me in a cautionary state where it's like, I'm probably not going to be placing trades unless there's something really good. I'll also kind of note, like, is there a strong trend, anything like that? Well, this one stalls out right near that prior low, can't get up to the prior high, but then it drops and it can't get below that level. This one bounces up, so this is looking pretty rangy to me. And in recent videos, we've talked about using those ranges as potential trading opportunities, but we would still want some movement. This, even though this had a nice drop, now we're here at about, if this is a trade we're considering going short there, at that point, that's at 344, so we're going back to about 245. We're still just kind of on that cusp of 15 pips. So, do you want to take that one? Well, we did have a nice breakdown. We're potentially maybe starting a trend here. So it's not a horrible trade. And then you do get a pattern here. So even if you took this one, let's just draw something like that. Doesn't have to be exact for demonstration purposes, 2 to 1, something like that. Then you end up with a little round bottom because it tries to go, it doesn't, and then this moves up to a slightly higher swing high than that pullback you were trading. If you're viewing that as a pullback, then you got to view that as a pullback, and that's a higher swing high than that one. And then a trigger there, so you would be getting out here. Would I want to go long? Probably not, because we'd be coming right up against that box again. Now this one does blow through. Trading is a probability game. So when I say I wouldn't take that one, it's because over many of those trades I've seen less than half of them work out. But that still means some will work out and run to the upside, but a lot end up chopping around here. And yeah, less than half of my trades are going to work out if I trade against an area like that. There's a little bit of news at 4 o'clock, but you can kind of see we're just stuck back in this old range. Nothing much going on. A little bit of news comes out. Now this range at this point's kind of expanded out, right? Because we made that low there. We've gone back up to the high. If we come back down, it's like now this low is now important. So as the day's moving on, I'm going to note that. You know, so we had this level here, which was important for a while, but then it failed. Price moved up. Now this low becomes important. So we'll draw the box around that. Now what about something like this? Do we want to trade a short? Not a very strong breakout. You know, this one was actually quite a bit stronger, not much of a pullback. Tries to go, it just couldn't go anywhere. And again, it's all probabilities, right? There's no certainties in trading. Nothing I talk about has 100% success rate. It's just trying to put the odds in your favor. Again, our mindset still, even at this point here, 412. How much movement do we have over the last hour or so? Going back to about 315. We're at about 12, 13 pips. Again, that's just kind of on the cusp. I'm definitely in cautious mode. And going back to what we talked about at the beginning, if our mentality is, I'm going to try to make some money, I'm going to try to catch some moves, we're probably going to get chopped up here. Maybe we take the short. Maybe we, we take this one. We're just kind of on the cusp of what's I consider even really tradable. And we don't have any really strong trends. You can see we're bouncing kind of back and forth. So this one went a little bit below, bounced all the way back. Unless something really changes, I would rather wait to see if this drops again, because then I have more confirmation of a trend, and I won't jump in once it moves lower. I'll wait for the pullback, hanging outside this area. Now we have definitely more movement. If the price got down here, now we're up to about 20 pips of movement recently. But this just barely gets below there. Is it a super high quality trade? If we had lots of movement, I would say, yeah, I'd want to be in that short. It broke below. It's kind of holding there for a couple times, like a double pump. Triggering outside. If it doesn't go, hey, it doesn't go. That's fine. But I don't mind that trade. But in conditions where we're not seeing a lot of movement, we're seeing choppy trading already. This is already evident. There has been zero follow through on any move. So that already puts me in a mind frame of I want to see some follow through before I start trading. I don't want to assume that follow through is going to start happening. What I mean by follow through is a drop, pullback. Follow through would be it continuing to the downside. There's almost no evidence that anything is following through. Drop, pullback, barely drops. Moves up, stalls out, moves the other way. Moves up, stalls out, moves the other way. Zero follow through. There's no move, consolidation, or pullback, then a continued move. There's no real trend. It's just choppy. So already this, if we're looking for yellow flags, we have low movement, we have choppy trading, no trends. Do I want to assume that's just going to continue to the downside? No. It's a low probability trade. We could take it, but you want to be quick on your exit because you already have some yellow flags against you, right? We're only moving about 12 pips in the last hour or so. What about this? We move back up into the range and it comes back, kind of tests. Now this is the new low, right? This here. We talked about it being choppy. Or I shouldn't say choppy. It's been having a tendency to range. There's no follow through. So move to the downside here. There's room for it to move back up to the top of the range. We've kind of probed this area a little bit recently, right? It tried to drop there and got a big bounce. It's tried to drop there again, couldn't make any headway. Now we're moving up kind of overall. Movement is still low. That would be something I'd want to keep in mind. Going back to about 315. Yeah, right around the 14 pip mark. But notice how this trade here, if we went long in this area, as it comes back, kind of tests out this, maybe look for the rounded bottom. There's a little one right there. I don't love how big that candle is, because we'll see what the... Okay, we could get a 2-to-1. Ideally, I don't want to go right near those highs. I'd want to be a little bit lower. And so we're getting pretty close to 2-to-1 if you have a small spread. If those candles were a little bit smaller, right, like a 2-pip stop loss there, then even conservatively, just below these highs, we're at 2.85 to 1. So we have room to move to the upside even though we have low movement. This one, you could say, well, we have infinite room to move to the downside. There's nothing in its way except for the fact that we have been just going back and forth with no follow through. So this is again looking at context. If we're in that mindset of really trying to make money, then we're probably going to get in too early. We're probably going to jump into trades where the context isn't good. You know, if we're really eager to get into a trade, we jump in way up here. We haven't really had the confirmation. Like, we're up in this range now for sure. But, you know, I like this. It's come back. It's kind of probed this area again. Couldn't make any headway. So, again, notice the mentality. If we're super eager, then you want to take maybe a TC here, which you could do. But if we're not eager and we're just going to wait for the best patterns to develop and things where it seems like easier money, then this pullback here that can't get back through this area or even into it, and then we get the little rounded bottom, to me seems a lot easier and less vulnerable, I guess you could say, than, you know, just jumping in somewhere in here. So again, the mind frame combined with the context. Where are all the yellow flags? When do we have room for the price to move? Even if it's a little bit lower movement, in this case, you can still get, well, these were a little bit bigger candles, but you can still get close to that 2-to-1. Ideally, that's kind of maxing it out, right? Because we've had this range. So I don't want to assume the price is going to go way up here. And it's been a little bit choppy. It has kind of got to prior highs, made some lows. You know, this low was lower than this low. This high got up to that high. But I prefer to be conservative. So this, again, even this one is really on the cusp of its 2-to-1, but it's maxed out at pretty much where I would want that target to be. Easier money would be if this range was much bigger, right? And like the highs were, give me a moment. And the highs were up here, right? Because then theoretically you could go for like a 3-to-1, 4-to-1. Remember, like all these highs would be up here. I'm just saying the range was bigger. There was more movement. Then this becomes super easy because even if you go for 2-to-1, the highs are up here. Like you're just capturing a portion of that. Trying to maximize it, which when we try to maximize, the odds of it hitting that are going to go down. But we could have it way up here. again, this is pretending the range was bigger, like if this big box was our range. Since it's a small range, even this is like really kind of pushing. Now, it does work out, right? The price does move up toward the top of that range. And we have a pattern, we have a level. Those things are there. But if we kind of looking at yellow flags, it's pretty choppy in here. It doesn't move. This is, how long does this take? Like 20 minutes or so of like super low movement combined with overall low movement. Even this one, pretty easy to get stopped out at. If this even chops around like it did for the last 20 minutes, even one more time, right? One more candle kind of goes down. You get a little more chop and then it goes. So even this one, not super easy money, where our target's kind of maxing out that range, which isn't necessarily totally ideal, especially since it's only at about 2 to 1. So this could be a no trade day. We could have taken a couple, but this could easily be a no trade day. And the only way we are going to have a no trade day on this type of day is if we are clear on what we want to see coming into the day, the patterns we want to see, the type of movement we want to see. And then once the day begins, we are only going to trade if things are really good. And that mind frame is so important, because if it's not there, you are just going to see what you want to see. You're going to see a break of that low, and you're going to think, I got to get short, got to make some money, this thing's going to drop, right? You start predicting, and really there's no real trend here. It's been choppy. I kind of use the assumption that things will stay the way they are until proven otherwise. And sure, I do have some patterns which maybe slightly go against that, but just because I've seen they work. Like if price is getting really squeezed after there's a big move and then price gets really squeezed, yes, I am going to potentially make some trades based on movement coming back in. But there would be a certain time frame, right? Like if it just keeps going on where it's slow and squeezing and it's taking too long, then now we're just drifting. The price, it's kind of lost what it had. But if it squeezes and then makes its move, boom, okay, I can trade. Or I can even wait for the price to make its move. So it gets that squeeze, you get the pop, see how that next pullback reacts. That's going to give you a little bit more confirmation of if there's any follow through. If it just dumps right back, then okay, there was no follow through. Wait for some follow through. So there's never, I don't find it too bad to wait for the kind of movement you want before trading, as opposed to assuming, or the death of traders is hope mode, where we're moving 12 pips and that's kind of below your threshold, but you see a setup and then you start stacking, I guess like kind of stacking odds, where you're saying, wow, we've only moved 12 pips, but if this breaks down, then we'll be at 15, so I can take this trade. You're just coming up with excuses to trade. The conditions aren't there yet. It hasn't had enough movement. So to assume that, well, okay, if this moves my direction and if it breaks through this level, then it would be a good trade. You're going to struggle, because you're going to have so many losing trades when that doesn't materialize. Because generally it's going to be, I find it much easier to make money when the market's moving and already doing things I want it to do, as opposed to assuming it's going to do things. And I see this a lot with amateur traders, is they're trading all these every time the price moves up, they're trying to go long here, thinking, wow, it's going to break, it's going to break. There's not a lot of evidence that the price is really breaking anything. And when it did here, it just kind of blew right through. You didn't have a lot of chance to jump in unless you just jumped in randomly right before it broke. But that would have killed you here, 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 would have killed you here. Didn't end up going, big pullbacks. Sure, this one eventually broke through some of those highs, but you had a bunch of losing trades along the way, just anticipating that, okay, price has got to break out this time, price has got to break out this time. Much better off letting the market do what you actually want it to do, or how you like to trade. Wait for it to show those signs before you even get involved. Wait for movement before you get involved. And the only way that's possible is if you have the right mind frame going in, saying, I am only going to trade once conditions are what I like. And absolutely convince yourself of that, because if you don't, everything starts to look like an opportunity and you get chopped up. A little bit different video than the prior ones, more about not trading, but that is, I think, even more important than the trades you take, because there's only so many great setups, but there are infinite opportunities to mess up. Every second you could literally be like, oh, it's going to try to break out. Oh, no, it didn't, so I'm going to get it. Oh, it's trying to break out. Oh, it didn't, so I'm going to get out. Oh, it's trying to break out. There's infinite opportunities to mess up. Even once you're in a trade, you have infinite. Every possible second, you could potentially exit, reverse, screw up somehow. The market gives us infinite opportunities to mess up, but only very few high quality, high probability trading opportunities. So in my opinion, you're going to find one of those high qualities every once in a while, but you could easily destroy the profitability of that by over trading and by infinite opportunities to mess up. So when we view it in that light, that's why it's so important to get that mind frame right before and set really strong boundaries for yourself on what you're going to accept from the market. Happy trading.